right, everybody. Welcome to episode 9 of the Beef and Bitcoin podcast with your hosts, Brett and CH. Today's topic is the Delphi Digital UTXO Analysis. All right, so first things first. In order to even understand what this analysis looks like, let's talk briefly about what a UTXO is. So a UTXO stands for the unspent output from a Bitcoin transaction, and every transaction creates a new UTXO. So the UTXO age indicates the last time that Bitcoin was moved. And since the ledger is fully transparent, you can see how long these UTXOs age over time before the coins move from one wallet to the next. So you can see that in the analysis from Delphi Digital, the UTXO line is a line that basically shows any UTXO, so any unspent transaction output, that has aged over 1 year and has not moved. And they use that as a basis to show different holding patterns, especially as the boom-bust cycle of Bitcoin continues in its cyclical nature. And very briefly, the key takeaways from the Delphi Digital analysis were lost coins likely make up a significant portion of the 5-year plus holders. And it's assumed that these UTXOs that have aged for 5 years are lost coins. And that's between, I believe, 2.8 to 3.8 million coins that are considered lost. And that study was done by Chainalysis. It also tells us the selling pressure from long-term holders is primarily those that have been holding for 3 to 5 years. So anybody who got in within the last 3 to 5 years started dumping their bags essentially during the run-up of 2017, which makes a lot of sense. And you can see that the youngest UTXO line, I believe it was greater than 3 months, you can see that UTXO line start to increase during the pump of 2017. So essentially that means noobs are coming in and getting their bags dumped on their head from the UTXOs that have been sitting there between 3 and 5 years. So it's very interesting insights into into like a fully transparent market. It's unbelievable. And now we are seeing another accumulation process that's very similar to what happened in 2014. So they can use that as a proxy to start making approximations for is the bottom near and when could the next top potentially be. So before we jump into the rest of the analysis, man, how are you doing this week?
Doing good. Again, I mean, I know it's a specific to UTXO, and I read this a few days ago through this whole PDF. And if you're watching on YouTube, you can see right now it's very interesting. And as CH stated, this whole transparent market thing, it's a best way to put it is a base layer. And I think if there's a book out there, if you're not a huge crypto person, but if there's a book out there, really books you need to read, it is Andreas Antonopoulos's The Internet of Money, Volume 1 and Volume 2. They're short reads, easy reads, and it's just a collection of his talks. But it really does a good job explaining to you the big picture of Bitcoin. It's not just this money, it's a secure layer. And once you see that, there is so much more down the road, and how, even though we are, 10 years in now? We are 10 years in now. What's this going to be in 20 years? What's it going to be in 30, 40 years? I mean, because you go back to initial TCP IP protocol, which was developed in the late 60s, like 68, 69. And, 30 years later, not even 25 years later, you have the internet. So it's going to be interesting to see where this takes us down the line. But this forecasting future cycles, and if you're watching on YouTube, as I stated earlier, I have the chart pulled up and it shows you, the 1+ year holders here start dumping as price rises. And it levels off here, pretty close to where the price bottom was. And then from there, as it drops, you see they show the 6 to 12 month UTXO, which means the holder's been holding that coin for 6 to 12 months, and then the 3 to 6 month one right here. And it's pretty interesting. You can see as the new 3 to 6 month rises, it clearly, as CH stated, people are dumping their coins. The long-term holders, or people in holding for longer, are dumping their bags into the new people, the new FOMO buyers, basically. And now we are seeing the 3 to 6 month and 6 to 12 month holders dumping as we see 1 year climb.
Yeah. It's also one thing I want to point out is those UTXO lines are going to sum to 100%. That's 100% of the UTXO set. So as coins move from one band to the next, they will move out of whatever band they were in prior. And you can see, as if you go through this analysis, you'll see that all of the lost coins eventually make their way into that 5+ year UTXO line because they're lost. They're just going to sit and age out. So if somebody bought a hardware wallet, wrote down their 24-word recovery seed and threw it in the trash by accident and forgot their PIN, those coins will continue to age and never move from that UTXO that they were in from the last time they were sent there, and they will eventually wind up in that 5+ year UTXO mark. I'm really curious to see how large of a percentage that ends up being of the total coin cap, but hopefully it doesn't get too much more than 4 million coins in total. Hopefully people are getting better with securing their shit. Like, I know it's not easy. It's definitely not easy keeping track of your coins, making sure that you don't lose them, get hacked, leave them on the exchange. But I'm hoping people are starting to wise up and take proper precautions to store their coins. And hopefully we have cheaper and easier multi-sig solutions that come, in the future. But it's early days for sure. So what do you think? Should we jump into the first slide here?
So here is the UTXO analysis and market cycles. This chart is, and this is just simpler than the other ones you might have seen earlier if you're watching on YouTube. There's the 1 year plus UTXO line, and basically we show you here price peak, price bottom, and how that coincides with the UTXO peak and UTXO floor. So we see the 1 year floor very shortly after a price peak, a few months. And it's just a similar pattern that keeps repeating itself. Now, there was one thing noted is these cycles get longer as we go on, and that's just because of the maturity of Bitcoin too. You got to factor in more people, more money, larger market. And here they talk about as we saw, highlight. Oh, no, can't highlight it for you. As we saw at the end of 2017, continued price appreciation leads to a rapid influx of new users, additional money into Bitcoin, often deep into a rally, subsequently falling by a significant price collapse. In other words, these individuals became the bag holders of their time. And when we refer to bag holders, it's just someone who gets stuck holding coins, basically. It's a common term in crypto. You can use it for other things, but that's common for crypto. And you can see here, 1 year drop off, 1 year drop off, and then 1 year rises when, price floor. So we don't find the price floor till here. And that's what they're going to be paying attention to. And we'll see it in later slides what they talk about. And here we are again. There's UTXO bottom and sometime in the spring of 2018. And we are still rising now.
Yeah, it's interesting to see that you can absolutely identify with using the UTXO line, seeing those coins that are that haven't moved for over a year. I believe they moved from, in the last bull market 2017, they went from 58% down to around 41%, which is pretty substantial. A decent 20 points, basically, of anybody who was holding UTXOs that were over a year old dumped their bags. And that was perfectly timed with the rise in price, which makes sense. If you've been holding for years, and you were waiting for a top, eventually when the price starts moving, you're gonna dump your bags. And if you've been in Bitcoin long enough, 3 to 5 years, you start to get a better sense of the cyclical nature of these crazy blow-offs and then crashes. And I don't doubt that we're going to continue to see that over and over and over again. I couldn't tell you how many more cycles there might be until Bitcoin is more mature, but I have a feeling the cycles will definitely get longer, and they go into in this analysis they talk about that more as well.
Yeah, the cycle length, and you can see it here even, it's very clear. at the start. I mean, there was a decent gap between that 100 or not even $100 peak. Jesus, like $50 peak here. I can't really tell because it's a log scale, but 50, 60. There was a decent time between that 2011 peak and then the next one that came in early 2013. And so when I was in crypto, and I was a little off topic, I thought we were going to have this scenario last year where we sold off and then did one more rally into another blow off top, but that didn't happen, of course, because now we're down here at 3,500. But as you can see here, there's a very quick cycle here where we sold off, really quickly from 250 to $50, and then went up to over 1,000. And the cycle here took from 2014 to 2018, so a 4-year cycle. And that's why you hear a lot of the people just throwing 2021, 2020, the next halving, whatever, as their next time for Bitcoin rally.
Yeah, and to be honest with you, this analysis was really good, and it does a good job at predicting as best as they can with all the information available to spot when the next when the end of the bear market would be, and then a potential peak for the next bull market. And luckily enough, their analysis is saying that the end of the bull market, or let's say call it the bottom, should be coming within the next quarter or so. As they said, it would end up being between first and second quarter of 2019, which if you take a look at the UTXO line as it's increasing now, getting closer to the 55% of all UTXOs have been aged over 1 year, that would start to make sense. You can see it clearly if you're watching this on YouTube. In the beginning of 2015, that increase in the UTXO line perfectly coincides with the bottom in 2015, and then the 1 year UTXO line stays flat, and that signals the accumulation period. So I think we're getting closer and closer to that accumulation period. I mean, people have been accumulating the majority of maybe second half of 2018, and now that we're into 2019 and we're back down to 3,500, a lot of people are accumulating, and I'm really interested to see how the UTXO line looks at the end of this year. I'm assuming it will get closer to that 60% of total UTXOs and start to flatten out exactly like it did during the last cycle. And we'll see how much longer that can get.
Yeah, and I pulled up the next slide here, which is the movement across the UTXO bands, which is a pretty interesting topic. And I think that something next we should dive into here. And it talks about how we see right here. So now we introduce the represent the coins that haven't been moved from 3 to 6 months and 6 to 12 months. In both instances, you can see untouched coins shift from the 3 to 6 month line to the 6 to 12 month line, and then eventually the 1+ year UTXO line. After these shifts, the UTXO line plateaus as we enter the brief quiet period where prices remain steady. Following this quiet period, the UTXO line, which is the green one, slowly begins to climb as we approach the next block reward halving, represented with the thin vertical line, which I think would be right there. These thin black lines right here. Yeah, that sounds about right. 2016, 2012. And it's very interesting to see how this works out, as I said, the bag holders and switching in. This would have been something really useful to have last year, to understand where we're at. But, it's something you can use now, and I hope any of our listeners, whether you're investing in Bitcoin, this isn't advocating investing for it, but you can use this as a tool, another confluence, if you want to invest in Bitcoin or buy Bitcoin. Don't just use this analysis, as they state clearly at the end of this. But it's just something, some food for thought, I think. And it really gives me a good idea. It's like, okay, you're seeing, the 1 year UTXO line continue to rise as the 3 and 6 month both are dumping.
Right, and that signifies those coins shifting from one band to the next. And it's really nice because that's, if you were to add all of the lines up together, you're going to get that 100% mark. So that's the entire UTXO set for all Bitcoin that are currently in circulation, which is kind of magical because it's insights into like a fully transparent ledger. You can see exactly where all of the coins are at any point in time and how they move. So it gives you interesting insights on human psychology also, which is really fascinating because now you have actual evidence into how holders think right? How long are they willing to hold before they want to dump their bags, or how early in the price appreciation do they start to take money off the table? And it looks like you can see in towards the middle of 2017, as the price started rising, got to 3,000 and then 5,000, 6,000 range, the UTXO line starts to decrease, which would signify coins basically being moved to the exchange and then being dumped. And you can see the youngest lines, the 3 to 6 month UTXO line, start to increase, and it coincides exactly with the 1+ year holders getting rid of their coins. So it's really fun to look at the psychology behind the people who have been in Bitcoin longer, and then the new people got in. I was a new person in 2017, so I would certainly have fit into that 6 to 12 month UTXO line and the 3 to 6 month UTXO line, as I was buying someone else's bags, I guess you could say.
Yes, I was too. I always think it's funny, this is a little off topic, but we talked about this a lot, is how we were all buying Bitcoin to buy altcoins, like in the summer of 2017 and through the fall. And like, sure, there were ICOs that were going crazy and a few other coins, like when Neo rebranded from Ant shares to Neo, and it went up like fucking a stupid amount in like a few weeks. But like outside of that, like most alts, like they went pretty much sideways in USD and lost a lot of money in Bitcoin. Like, I thought about all the times I bought Bitcoin at like $2,000, $1,800, and then put it into an alt, and I was like, shit. When Bitcoin went up to like 10,000, 12,000, you're like, wow, 6x, 7x, 8x. So it's just one of those funny things where we were all buying shit coins, and holding Bitcoin the whole time would have been more profitable up until basically Bitcoin peaked at 20K, and then we saw the altcoins basically pump after that. And there was a pretty interesting thread with that. I know here again a little off topic, but the POW coins all peaked, with not all POW coins, but like Litecoin, Bitcoin, and some of the other coins all peaked at the Bitcoin peak on like the whatever it was, the 17th of December last year. And then like Ethereum, Ripple, Stellar, you name it, a bunch of other alts or different alts all peaked after. Like all the ERC20 coins peaked like January 3rd. So it was pretty interesting to watch that happen, and just the rotation. And it's the same thing as the stock market, where there's rotation from stocks to other stocks. Same thing with crypto. You see rotation from Bitcoin into altcoins. That's why when you see a Bitcoin pump, then you'll have an alt season follow. That's why you always hear people speak about alt season.
Yeah, it's interesting. I don't want to get too far off topic with this, but I'm curious what the next alt season looks like, which coins may be a part of that alt season, and if there's another ICO fest. I'm not 100% sure we're going to see that, because I think enough people got their hands slapped by the SEC, and I think they would know better than to launch more ICOs in 2019. They should take a page out of Satoshi's book and create an anonymous coin and don't leave trails if they're going to even attempt to do such a thing. But I mean, I don't know. People are stupid and will just keep doing ICOs anyway. So who knows? But we'll see how that plays out. I'm not so sure we're going to see another alt season, but we very well could, and it's not going to surprise me.
Markets stay irrational longer than you can stay solvent, and
exactly.
that's the only line I have. Like we've seen some, we've still we've seen some altcoins. I've been watching some stuff in the crypto market, and you've still seen some altcoins like triple, quadruple in the span of a few days or a week. So really anything's possible.
Yeah, I mean, it's just great insights into human psychology. You can see people, even followers who have been following me for over a year now, who have seen even my progression go from shitcoiner to wanting to study more about Bitcoin and Austrian economics and monetary history, and then it's a cycle. Everybody, it's like that meme with the brain in like 4 steps, where it's like Bitcoin and then Ethereum exactly. And then like other altcoins, and then like the last one's Bitcoin again. And it's too funny because that literally happened to me. I'm living a meme, and
this is us.
Yeah, that's exactly right. And it's like, it's funny. I was talking to Dan Held the other day, and he said it's the hodler's journey. Like, you need to you're only going to learn about Bitcoin when you're ready to learn about Bitcoin. And when you want to jump down the rabbit hole, there's so much information out there. And if you don't know where to look for it, send us a DM or something. We'll help point you in the right direction. But the rabbit hole is super deep, which is exactly why this podcast exists, actually.
Yeah, no, we both were like one day we're just like, oh, podcast, and it's like, why not? It gives us something to do, and I've enjoyed this whole thing. It's so much fun because I have someone to talk with about a subject that really no one knows about. So it's like, it's hard to explain to like the no coiners, as we see here, no coiners. If you aren't in crypto, it's just like you're talking to a wall. It's hard to explain like the things you went through in the past 2 years. Just in everything. Whether we're talking about the fucking Tron, BitConnect, fucking, all these random things, and that people who aren't in crypto have no clue about. So who's selling and are they done? This was a pretty interesting thing I read through when I read through this a few days ago. We've established that there is a reduction in natural selling pressure from the reward halving, but it's also important to address another major source of selling. Long-term holders. The one-year UTXO line only changes when the coins that haven't been moved for a year are moved, or when the coins cross the threshold of being untouched for less than a year and go over to a year. Actual movements across these bands can only be analyzed through the individual time bands that make up the 1+ year UTXO line, which we break down to the 1 to 2 year, 2 to 3, 3 to 5, and 5+ year. Applying the analysis to most recent decline, we can get an idea of where the selling pressure is coming from and approximate how close we are to selling exhaustion. As the price started taking off in early 2017, we saw a simultaneous decline in the 1-year UTXO line. This was indicative of people likely moving their Bitcoin to exchanges and selling it. Looking at the same time frame from a UTXO perspective, captured by the blue box, and the blue box is right here, my mouse cursor is circling it, we see 1-year UTXO line drop roughly 58% to 41%. During the same time, the 5-year remains nearly flat, going from 2.8 million coins to 3 million coins. Most of those unchanged coins are, most of the change is a result of the increased supply. Chain Analysis completed a thorough analysis of likely lost Bitcoins and came to an estimate of 2.78 to 3.79 million coins. Although these coins were lost throughout Bitcoin's history, the majority were lost early on, especially given that the person or persons known as Satoshi Nakamoto account for 1 million of them. And that was what we were going to mention earlier, is that how like Satoshi's coins make up 1 million of the 5+ year coins. And then also another thing was this implies a significant portion of the 5+ year band are lost coins. The rest of the lost coins will progressively make their way through the bands in a similar fashion, ultimately ending in the 5-year plus band. That's a very interesting thought. One of my roommates from college, him and his friend, and bought Bitcoin way back, and unfortunately the kid my roommate bought Bitcoin with passed away. And like last year he told me about this. This is when Bitcoin started rising. I was like, and I didn't like mean to pressure him or anything, but I just told him, I was like, I know, whatever happened, but it's like, you should try to figure out where you lost those things and try to sell them and just split them with the family. Because he had like a couple coins at least, and when Bitcoin was at whatever 20K, it was like, they probably had anywhere from 60 to 100K in Bitcoin in this lost wallet or whatever, lost keys. So it's just one of those things where, I think it's, a lot of people end up buying Bitcoin and not really understanding it, and it's still like I still struggle with things, but I've gotten more competent when it comes to sending transactions and understanding where to properly store coins and whatnot.
No, that's a really good point, and I believe Casa Hodl's doing a really good job helping with estate planning, especially with Bitcoin. So you're gonna want to make sure that in the hopefully a very rare occurrence that you do pass away or are incapable of accessing your keys because of whatever reason, that someone can help a close family member, friend, or loved one to access those coins and keep them in a safe place. I have a feeling that's going to be a huge industry in the next decade, making sure that those keys are well taken care of for the people that they should be left to. Kind of crazy to think about, but it is something that crosses my mind. If something happens to me, do my friends and family know how to sweep my private keys and and keep them somewhere safe. And I think that's where the custodial solutions really need to improve and get better. You can't trust. I wouldn't want to give my dad a Trezor and be, maybe one of three of my multi-sig to secure all my coins, because he doesn't know what he's doing yet. So I have a feeling it's going to need to get a lot better, and you're going to need to educate your friends and family, and you're going to build this web of trust that's more secure than a bank, right? So you could take your 24-word recovery seed and put it in a safety deposit box at a bank. Well, guess what? If somebody knows that that's there and they want to go take your recovery seed from the safety deposit box and sweep your keys, there's literally nothing you can do about it. So I definitely think a multi-sig solution would certainly be better, but the other people who are associated with that multi-sig need to be competent enough to use whatever device is available in the future that allow you to sign transactions. So a little off topic, but something I really do think about.
That's something I was like really running through my mind last year was like fuck, pardon my language, but like what if something happens to me? I have all this crypto and nobody in my family knows what the fuck or how to use it. And I was just like, Jesus. Obviously, thankfully, nothing happened, but like it was something that was running through my mind. I'm like, if something does happen, this shit's probably lost. Like, unless they can, put the time in, like I did, put the time in to understand how to move coins around, how to store them. Because I spent a fuck ton of time, and especially when I first dove into crypto, just understanding everything. I really put a lot of time in.
Yeah, it's definitely scary, and hopefully it gets better, because it's hard, because on one hand you don't want to outsource that responsibility. That's what we have today, right? We outsource the responsibility of securing our money or our cash, right? We put it in the bank, which it makes perfect sense. You're not going to keep tens of thousands of dollars in cash in your home or apartment, because that would be a security risk for yourself. That's exactly why they're in a bank. And now with Bitcoin, you can potentially be your own bank, but that could leave you vulnerable to, what do they call it, the $5 wrench attack, where somebody comes to your home or apartment and says, hey, I know you have a shitload of Bitcoin. I'm going to shoot you unless you give me the keys. So you got to figure out another way to have more home defense, or have everything locked up in a multi-sig where there is no recovery seed to just hand over. There's no way to access those keys, because the keys are in multiple geographic locations. But we'll see how that plays out. That I'm really excited about. Key management is going to be critical to onboarding more users to Bitcoin.
On your point about the whole cash at the bank thing, I'm going to counter you and play a little devil's advocate. If you do have a big enough and heavy enough safe, it really isn't a bad idea to hold the cash yourself, especially if you are because the FDIC, which is the Federal Deposit Insurance Corporation, only insures up to $250,000, which obviously is a good amount of money, but still there's people that obviously have more than that. And like shit, if I was going to store $250K cash, if I had more cash than that, and I had, and I knew, I was like, well, I can't trust the bank if something happens. If there's bank runs, I can't trust them because I know they won't have my money. I would prefer to, have my own safe and just store the cash there, because I know, hey, if I have $1 million in that safe, that $1 million is going to be there when I want to use it. If I went to the bank, they're only going to guarantee that $250K. So it's just a little counterpoint to what you said earlier.
Oh, I definitely agree with you. I think now that Bitcoin exists, it really has flipped everything else on its head. So I question now how much money I keep in the bank. Maybe a bank run is a low probability event, but it certainly can happen, especially since you can't predict when hyperinflation would happen either. So my entire savings could be worth half as much as it is today tomorrow. You never know. It can happen at any time. It's unpredictable. And now that we're getting used to securing our own keys and managing that, and I have a good feeling home defense is going to be another big industry. If at that point you might as well take full responsibility for your keys and defend them to the fullest extent of your constitutional rights. So, that's a whole different argument. But eventually some people, maybe the millennials, won't trust banks nearly as much as they used to after watching shit hit the fan in 2008, and then potentially another even more catastrophic event in within the coming years. Yeah, we're not going to trust banks ever again, especially if they get bailed out again, which I hope doesn't happen. But
I know we're obviously queuing a little off here, but it's still kind of part of this topic because it is Bitcoin. Um, I can't imagine us doing another bailout thing like 2008. I don't think it, in the current situation we're at with one, the central bank balance sheets are still overloaded. There was like a crazy stat that the Bank of Japan has just bought so many assets, it's run out of shit to buy. It has surpassed like Japan's GDP. It's just ridiculous what's going on there. And there was a chart I had earlier pulled up, which was, I'm just going to pull it up. Just, I know it's a little briefly off topic, but with recent, here is global central bank balance sheet. So after the 2008 financial crisis, central banks like the Bank of England, Bank of Japan, ECB, which is European Central Bank, the Federal Reserve, all pumped the market with trillions and trillions of dollars to thus save the markets from impending collapse. And what that did was it boosted asset prices, and the people that affected the most were the wealthiest. And this is why we are seeing this huge rise in populism right now, and we are seeing the system just breaking down. And you can see it in France, you can see it in Italy, you can see it in Europe. Germany's entering a recession. I think we talked about this beforehand. If Germany's in a recession, one of the strongest countries in the EU, what country in the EU isn't in a recession? And right here you can see global stocks. This is just a indice of global stocks. We had that huge sell-off at the beginning of October that bottomed on December 24th. You can see obviously central bank balance sheet going down, and then here at that bottom, pump, added liquidity. It's as simple as that. That's what's driving these markets. No fundamentals. Yeah, no, when I saw that chart, I was like, okay, well, now it all makes sense. We've had a 12% plus rally or something like that in the S&P 500 in the span of, 2.5 trading weeks. So it's pretty impressive. But the thing is, it's going to revert, and it's going to revert harder because the market takes the stairs on the way up and the elevator on the way down. Yeah, so this is the third slide of who's selling and are they done. A key takeaway from combining these concepts is it doesn't require much coin movement from the 3 to 5 year band to the 5+ year band to create an uptick in the latter, since a small percent of the 5 year plus UTX coins have the ability to move. And why it means the ability to move is because either they are the million plus Satoshi coins owned by Satoshi Nakamoto and the said peoples, or they are lost. So here it goes. Logically, declines in the 5 year plus band imply very few coins from the 3 to 5 year band were held and moved into the 5+ year band. We can safely assume the primary source of selling came from coiners who've been holding 3 to 5 years, given the combination of a massive reduction in the 1+ year UTXO, flat 5-year UTXO, minimal decline in 2 to 3 year UTXO, a significant uptick in the less than 3 month UTXO, which means coins bought from between day 0 and day 90. And they only show it here because they're talking about too much noise. And significant downturn in the 3 to 5 year UTXO that coincides with the 1 year UTXO. And that would make a lot of sense because you got to think a lot of people got into Bitcoin in that 2013, 2014 timeframe right here, and even 2015. So that gives that perfect band for that 3 to 5 year span with the people who obviously dumped on the way up or after we peaked.
Yeah, it's interesting to see that. I mean, it makes perfect sense that the 3 to 5 year UTXO line coincides with the 1 year UTXO line. So you can see, if you're watching this on YouTube, you can see the purple line number 5, which is the 3 to 5 year UTXO line, start to decrease right around summer of 2017 when the pump started. And it's the same thing with the green UTXO line, which are UTXOs that have aged over 1 year. So that's anybody who got in maybe in 2016, maybe they found out about ETH and decided they wanted to hold some coins. And they started dumping right when the price started to rise, which I don't blame them because they were catching huge multiples, right? They were up so much already. and you can see the newbies coming in with the lines that are increasing towards the line number 4 there. I believe that is the 3-month UTXO line. So those are the noobs getting into the space who are buying everyone's bags as we get to the top. And that makes perfect sense because Bitcoin is so cyclical. And the people who were buying in 2017 will be the Bitcoin OGs during the next pump in 2022 or 2023 or whatever. Just like the people who got in 2017, think of the Bitcoin OGs are the people who got in 2013. So everybody becomes an OG after a long enough time, which is pretty sweet.
So I had to laugh at that. And it's pretty interesting here. You see the 3-month, which is this dark blue line here, really uptick as this dumps. And obviously, the 3-month starts to really decline as we get closer to the into 2018, where price dumped a lot. I think a lot of people were still holding through that initial dump we had between January, February, March. It was scary, but it's not that scary. And then, we had that big move up to almost 10K. We almost hit 10K in May. Not that we didn't on the way down. We hit 11K a few times. But that 10K push was huge. And then when that didn't happen, I was like, well, we are SOL here because Bitcoin is driving everything.
Right. And again, this analysis can only be done because the ledger is transparent, right? And you can see that all of those all the different UTXO lines are going to sum to 100, which is unbelievable because you can get a full snapshot of every balance on the network at certain periods of time, and you can query the blockchain and pull this information for yourself. You don't have to even trust Delphi Digital if you don't want to. Start running a full node and start pulling the data, and you can see how these UTXOs age over time. It just gives unbelievable insights to the most transparent asset in human history, which is unbelievable.
Yeah, no, and you made a very, very good point there about that. It's absolutely incredible how this works out, that you can see every transaction and everything going on. And there's nothing else like this. I mean, obviously there's other cryptos that do it, but there's nothing else like this before.
Yeah, I mean, you couldn't see query the data to see, okay, who's like the noobs getting into other stocks or other commodities and how old their balances were before they've been bought or sold. Like, it's impossible to do that. It's crazy. Yeah.
Just want to do a conclusion?
Yeah. All right. Crush the conclusion.
Conclusion. The purpose of this analysis is to provide insight on Bitcoin holder patterns to improve our educated guess on the timing of the price bottom. We don't believe this analysis should function as an indicator on its own, but rather that it is used in a combination with other relevant data to make the most informed decision possible. We've established that selling pressure from long-term holders is significantly tapped and accumulation has begun. Using the timing of previous price bottoms relative to different Bitcoin accumulation points, we can use current UTXO dynamics to forecast a rough date for a price bottom. We specifically tracked the price bottom relative to the 6 to 12 month holding peak, the forecasted UTXO 1-year holding peak, and existing UTXO 1-year holding bottom, and the forecasted slowdown point of the 1-year UTXO growth rate. This results as a cluster of dates that indicate a bottom in Q1 2019, and we are currently in Q1 2019. And I think that's pretty close to about right. I just from looking at charts, if we do another leg lower, which I think at this point, after looking at the high time frames today, if we do that, I wouldn't be surprised, to see a 2,500 down to 2,000 Bitcoin. Would be scary as going below 1,800, because below 1,800 means that we'll likely retest that 1,100 roughly high of 2014. But I'm not going to dive too quick into that or too deep into that. But from a high level, the results of this analysis are also supported by the trends in valuation multiples, like declining NVTS, which is, do you remember what that stands for? NVTS is something value, something.
I can't remember, but there's a really good write-up on NVTS, and now that I'm thinking about it, we should definitely do a full episode on what that is and how it's calculated and why it's important, because it's a really interesting metric. Yeah, he crushed it. Yeah, and if you're interested in learning more about how they came to those conclusions of the next UTXO peaks and floors, I would jump into this because they have a really good analysis on how they calculated the slope of the UTXO line to use as a proxy to figure out where the potential peaks and troughs would be. So definitely take a deeper dive into that. But so it looks like when after reading this whole thing that they're expecting a peak in price would come around that year end 2022 or beginning of 2023, where that red line is going down to January 2023, which would make sense as the cycles start to get longer and longer. But what I'm really excited about is for the cycle after that, which is awesomely identified as store of value. So it'll be interesting to see two things. One, what the price will be during what they expect to be when Bitcoin would be considered a reliable store of value. It looks like that might be in 2030, if I had to guess, which could make sense. That's 2 cycles from now, and the cycles will get longer, so it's going to take a lot longer to get there. But I'm really curious to see, assuming money's worth what it is today and 10 years from now, what that total market cap of Bitcoin would be to be considered a reliable store of value. I guess if you were to use gold as a proxy, that would put you in the $7 trillion mark. But I wonder if it can't be less than that for it to make sense as a reliable store of value for the average person. I don't know. We'll have to wait and see how that plays out, but it'll be interesting. Like how many people are going to say, all right, fuck it. Bitcoin's not going away. It's over $100,000 in price, and it only dropped to 25,000 or 50,000, and it did another cycle. I guess it's not going to zero. How many people are? At what price do people start to get convinced that it's a reliable store of value, even with the extreme volatility? If you have $1,000 that you want to store and secure through time, and you're going to say, okay, I don't need this $1,000 for 10 years from now or 5 years from now. I'm going to put it into Bitcoin because I have a feeling it could increase in price, and I know that it won't be inflated because it's impossible. That's really how I think about it. I'm taking money out of the system that I know isn't going to get inflated by any outside party, right? It's not. It's governed. 21 million, that's all there will ever be. So I don't have to worry about my Bitcoin ever getting inflated, although it could be extremely volatile in price, which is to be assumed as something becomes adopted as money. It's not going to be adopted as money yesterday and be completely flat in price. It's irrational to think that would ever happen. But a lot of people think that Bitcoin would never become money because it isn't already money, which is, not logical.
Yeah, it's definitely an interesting thing to talk about. It's a new form of money. It's not asset backed, not centrally controlled, and it's basically just a ledger, distributed ledger that people check, basically verify.
Yeah, it's interesting that Bitcoin is nobody else's liability, right? It's not a liability on anybody else's balance sheet. It is. It's wild. It's really wild. It's like if you think about what money is, like if you really start thinking about it, if does a money necessarily have to have been a commodity to become money? And Bitcoin is a technical solution to just pure money. Like that's what it is going to be used for in this case. That's the only thing that you would use it for. So in order to do that, you fix the supply. You make sure it's as secure as possible, that it can't change, right? That no one's going to inflate it, and make it costly to produce. I highly recommend reading Nick Szabo's work. You can just Google it and jump down that rabbit hole of the history of money and how money that's historically been costly to produce has been a very dominant store of value throughout time, just like gold. It's expensive to mine for gold, which is a reason why, and it's so rare because it's expensive to produce, and that costliness, that unforgeable costliness, can't be replicated.
It's amazing. I know always discuss this, but it's really amazing what this is, and I think a lot of people just Bitcoin, no big deal. Bitcoin, what's Bitcoin? But I don't think a lot of people realize how big of a deal this is. Having a ledger, having a ledger that is being able to have a ledger that you can see everything going on, and you can send value at any time of the day from anywhere with a connection to the internet. Basically, you can send value, and for pennies on a dollar. So this is going to affect everyone, whether they like it or not.
Right, that's a good point. You don't really have a choice. Like it's going to be the hardest money we've ever had, and you can't just avoid it. There will come to a point where you can't. Right, it will be irrational to just say, I'm not worried about Bitcoin anymore, especially when you keep seeing your savings get evaporated over time. People will start to wise up, especially when how's the story go? Everyone's getting rich on Bitcoin except for you. I think they ran that article in like 2017, and then all those people lost everything. So it's kind of ironic. But
that New York Times article literally came out on like January 3rd or 4th last year, and that was like the perfect top. It literally picked the top perfectly. It was hilarious. It was like two dudes with the fucking Bitcoin and Ethereum shirt. I'm just gonna pull it up just so people know what we're talking about. It's like, and I think it perfectly coincided with the crypto market cap top. I remember seeing this, and like I've mentioned before in previous podcasts, I was talking January 13th. That was literally the top of that market cap. Had happened within that few days before that or whatever. But my step cousin who does private equity, we were talking about it, and he's like, yeah, you're gonna dump your stuff. I'm like, we're getting pretty close to that, because it was like over Christmas, how how it was between freaking Christmas and New Year's, how insane it was. It was insane every day. It was like, oh, new ATH in my portfolio every fucking hour, dude. It was stupid. It's hard to explain to people what that's like, like how ridiculous it was. It really ruined me too, because you want 100x or 25x, and that's just so insane.
Yeah, you're looking for all these ridiculous pumps that you might not see again, and you get pissed off with a 2% day in equities, or 1% day, and then you're happy about that. And these shitcoiners are used to 10x days out of nowhere.
Well, anything else you want to cover here?
No, I think this was a really good episode. I think this is really important to understand. I highly recommend everybody who's interested to go check out Delphi Digital's UTXO analysis, rip through it. They have a really good tweet storm that's a summation of that, but it's important that you have a good understanding of what a UTXO is, first of all, and why it's important that you can perform this type of analysis to get insights into the psychology of a holder.
And we'll link it in the YouTube channel. I know we can't link it to the other Spotify and Apple podcasts, but we'll link the Delphi Digital UTXO PDF in there. And if you're just looking for it, it literally is delphidigital.io/UTXO. But if you just type Delphi Digital, you'll find it.
Yeah, it'll be the first thing that comes up. One other thing before we come to a close here, if you have a chance, like and subscribe to this on YouTube, your favorite podcast catcher, whatever you listen to us on. Leave us a review, however many stars you want to give us is fine. It would be really helpful to us and gets the name of the podcast out there, so we can start getting more listeners and people contributing and letting us know what you want us to talk about. So with that being said, have an awesome weekend, keep holding, and do some fucking research.
DYOR, do your own research.